Good morning, good afternoon, good evening. You are watching the Paris Fintech Forum Communities video interview series. I'm Elliott Gotkine, and today I'm joined by the co-founder and CEO of Keyrock, Kevin de Patoul. Great to have you with us.
Thank you, Elliott. Great to be here.
All right, so before we get cracking, let's learn a little bit more about Keyrock. So, Kevin, tell us about Keyrock. Tell us everything we need to know.
Sure, and to be fair, that could take the whole recording. But so I founded Keyrock about 8 years ago, somewhere end of 2017. So the starting point of the company really is a kind of a core belief that eventually all assets would be digital, right? And so when we founded the company in 2017, my co-founders and I had been interested in digital assets and what is mainly known as crypto for quite a while. And the way we looked at it, we saw that crypto was a proof of concept of how you can digitally represent value, but that eventually this concept would be applied to all types of value, all types of assets, and that eventually we're looking at a complete rewiring of the entire financial system. Now, what we realized back then, it was around the time that ICO started to happen, and more and more tokenized assets, crypto, were being created. We realized that if you accept that hypothesis that all assets will be digital, what you end up at the other side of it is a market that is dramatically different from traditional markets. And the main difference in our eyes is that the market is built on partially decentralized technology, which is also partially open source. This is great because it creates a lot of composability, right? It's very easy for companies to build on top of one another, right? Which creates innovation, but it also has a byproduct, which is fragmentation. And so the reality is that in a fully digital markets, the assets themselves are a lot harder to price and to access that you would see in traditional markets. If I take a very concrete example, if you take the price of a stock, most stocks will have one listing. If it's a tech stock, it's going to be, listed on NASDAQ. There's one price, one quantity to buy or sell. It's very easy. Now, if you take Bitcoin, which is, the biggest digital asset of them all, there isn't one Bitcoin price. There are thousands of different Bitcoin prices, and behind each of those prices, there's different liquidity levels. So you have a market that is a lot more fragmented, a lot harder to access. So really our take back then was that, eventually corporate clients, institutional clients will require in a fully digital market the same type of, financial products and services that they require today in traditional markets, but that the capabilities and the technologies that firms will be required to have in order to serve them would be dramatically different. And so that's kind of where the idea from Keyrock came about, to really create this, crypto investment firm that can really serve corporate clients, institutional clients on all of their needs, but fully built on digital rails for a completely digital market. And that's where we got started.
Perhaps you can just take us through, very briefly, the specific products. I know you're a market maker, for example.
Exactly.
You also have an asset management division as well. So just perhaps take us briefly through the numbers and
sure.
Also share with us some of the kind of growth that you've been seeing in these different verticals, perhaps, and maybe your path to profitability.
Yeah, sure. Happy to do that. So, as I said, we got started with our first service. When you want to build something that big, you need to start somewhere. And the first service that we put on the market is market making. So, market making is how we provide liquidity to token issuers to make sure that markets are efficient. And that's basically the first service we focused on for the first 5 years of the business. We got to a certain critical mass, after 5 years, and we started opening new business lines, mainly our OTC desk, initially on spot markets only, but then also on derivatives and options market. And what I describe here is Keyrock Capital Markets. And then earlier this year, we launched Keyrock Asset and Wealth Management with the acquisition of Touring Capital. And so in between, capital markets and now asset management, those are the pillars of this, a broader financial institution that we are striving to build. In terms of growth and the numbers, so today, I think if you put together capital markets and asset management, we're a team of around 215 people. I think today we've seen dramatic growth over the last 8 years ever since founding. So the crypto market goes up and down. Keyrock has been growing every single year, and I think that we're close to the end of 2025, and we're going to be doubling our revenue this year versus last year, knowing that we had tripled them versus the year before. So we really have a very, very rapid growth, and we are a fully profitable company. So it's not a path to profitability. We are fully profitable already.
And in terms of the future, where do you see most growth coming from? Is it going to be geographical expansion? It's going to be product expansion?
So, I mean, for us, we are crypto digital assets. It's a worldwide market. So we are active worldwide already with our team. I think that the expansion for us is really that switch between what is known as crypto. There's a proof of concept, and that concept being applied to all markets. And this is something that we've started to see already this year with stablecoins, really becoming more and more mainstream. With the Circle going public, with the Stripes acquisitions and so on. We're seeing stablecoins being the first real world asset be fully tokenized. We're seeing more and more data around tokenized funds as well, with major players like BlackRock, like Apollo, like Vanek, Franklin Templeton tokenizing their products. So for me, the very big levers and avenues for growth for the next 1, 2, 3, 4 years is really the concept of digital assets more and more being applied to all types of assets and eventually replacing finance at large.
And so, I mean, replacing finance at large. I mean, what is the ambition here? I mean, are you going to be like the kind of citadel for crypto? What's the big plan?
So I think that you could have there could be clearly some comparisons with the Citadel on some of our activities. I think that we're more our strength has been really in building a client franchise, right? So I think that longer term, actually, our positioning would be more closer to some of the largest investment banks today. Clearly, we're not there yet, but that's kind of the aspiration that we would have over the next few years.
Okay, so we've heard about Keyrock. Let's now learn a little bit more about Kevin. So, Kevin, you co-founded Keyrock in 2017, I think. Given that you only finished, I think, your master's in 2013, and at least according to your LinkedIn profile, you only had 2 kind of jobs before this. Is it fair to say that Keyrock, or perhaps setting up another tech startup or something else in the crypto space, was always the plan for you?
Actually, not. It's not. That's not really fair to say. It is how things are eventually panned out. But so indeed, so I graduated in 2013. Started my career in management consulting, and did that for 4 years before launching Keyrock. So actually, it's as I was working in management consulting, I realized that what I wanted to do really was to launch my own company, and that was actually the starting point. And then came the question of where, what, in which segment. And I've been fascinated with Bitcoin since 2014, 2015, and so it was kind of natural to build in a space in which I saw so much growth and potential. But it's really something that developed as I was working as a consultant. I realized I wanted my own thing, but initially it's not something I had in mind when I was in uni or before, like I'm going to be the CEO of a company one day. It just came about to some extent.
And I mean, working in the crypto or blockchain digital assets kind of space is obviously a bit of a roller coaster. I mean, perhaps even more so than founding a normal fintech or startup. How do you manage between a kind of, I guess it's kind of like feast or famine, or it's not like a kind of straight line going up in that space. So how do you manage with the ups and downs? Do you just kind of block out the downs and just kind of focus ahead, or do you have days when you're kind of thinking, well, maybe this wasn't the best idea after all?
So I think that evolved, to some extent over the years. So when I launched Keyrock, it was in December 2017. That was kind of the peak of the first bull market, and then everything was red and going down for the next 2 years. And back then, the reality is that everything blockchain based was very much of a promise, but there wasn't actual use yet. Later on came decentralized finance, DeFi, and so on. And so there was really something that, oh look, there are users. It's actually, this technology is not just a pipe dream. But the first 2017, 2019, all of that didn't exist. So there was sometimes some doubts, right, of where the market would go, and where, existential doubt on, the technology itself. But that's long gone. And now I think the conviction is there. I think the key trick, the most important part for me really is the time horizon that you focus on. So when we set out the building Keyrock, in our minds, like we are going to be one of the largest financial institutions in the world over the next 20 years. And that's what we focus on. And what happens in the meantime, that's just noise. And I think that you start, it's the same thing when you invest, right? If you buy Bitcoin today, and then you're really stressed about where it's going to be, at the end of the month, well, you're going to be checking every day, right? If you say, what, I'm buying Bitcoin today, I have conviction for the next 10 years, all of a sudden you don't care about the noise that is short term, because what you're looking at is a much longer term horizon. And so I think that, this has always been the key for us, is that we know that there's a lot of noise in markets, especially in crypto market, for something that is still very immature, very early stage. But we had a conviction on the very long term, and we still do, and that helps us to tune out everything that happens in the short term, because it does not put in question, the conviction that we have fundamentally that this is a better way to represent value, and that eventually all markets, all value exchanges will be based on that tech.
And Keyrock isn't the only passion of yours. I think you told me you were training to be a tennis pro at one point, and now you're into backcountry skiing. Now, I've heard of cross-country skiing, but I don't know what backcountry skiing is. Maybe you can tell us, because it sounds awfully tough.
Sure. Yeah. I mean, yeah, definitely. I'm a big fan of sports, in general. And indeed, it started with tennis, where I was young, I was dreaming of being a pro. Clearly, it didn't work out, or we would be talking about a completely different topic today. And then, in my day-to-day life today, I continue to do a lot of sports, and backcountry skiing is one of them. So slightly different than cross-country. Basically, the idea is that you put skins underneath your skis, which allows you to walk up. So you don't use the lift or anything. You walk up the mountain, you get to the top, you take the skins out, and then you ski down. Then you do that again and again and again until you reach, I guess, the finish line. So I'm a big fan of that. I do it every year. And I mean, sport for me is a very important part of my mental sanity to some extent, where everything is so crazy in the professional life. It's nice to have something that is very, in a very controlled and a reassuring environment like sport. So definitely something that is very, very important in my daily balance.
Okay, well, good luck with your next race. So look, a key part of this interview, Kevin, is to get your take on the future of finance. But first, we're going to take a very quick break, after which we are going to continue our conversation with the co-founder and CEO of Keyrock, Kevin de Patoul. Welcome back. And don't forget, if you're not already a full member of our community, everything you need to join can be found at www.parisfintechforum.com. Okay, so now, Kevin, let's talk about the future of finance. So, Kevin, the year 2025 was looking incredibly promising for crypto as a kind of asset class, but the worm turned somewhat towards the end of the year. Are we in another crypto winter right now? And if so, when and how do you think we're going to emerge from it?
Not at all, actually. I don't think so at all. I think there's somewhat of a disconnect between the short-term price action and how fundamentals are looking for the market. If you look at, the key risk factors that were there over the last few years, be it, actual usage of a new technology, be it, regulatory risk in different jurisdictions, institutional adoption as well on this new tech. Well, all of this is gone. Like those risk factors are completely removed over the last, have been removed, over the last 12 to 18 months. So I think that in terms of crypto, like digital assets as a technology and blockchain as a technology being used, I think that the next 3 to 5 years are going to be extremely positive. Now, what we are seeing, though, indeed, is that in the last year, the institutionalization of crypto and Bitcoin, Ethereum, and others, that also means that the market moves a lot more closely with the rest of macro environment, which, as we know, it has been filled with uncertainties over the last few months. So I think that the reason why the market is down now is a bit more quiet now, has nothing to do with fundamental risks that are linked specifically to crypto. It's just that crypto itself doesn't live in the silo anymore. Is linked to the broader economy, and therefore can sometimes move along with it. But in general, if I look at the road ahead, quite frankly, I'm surprised Bitcoin is not at 1 million yet, because we are seeing all the proofs in the market that, this theory of, every asset will be digital, when it's one thing, when Kevin, the CEO of a crypto startup, says it in 2018, but it's another thing what Larry Fink says that all year long, the CEO of BlackRock said that for a full year in 2025. And so I think that I'm just taking him as an example, but there are many others, large institutions that are corroborating this longer term vision of financial markets. So if anything, the next 3 years are going to be extremely positive, I think.
And sorry, just to check, you said you were surprised Bitcoin wasn't at $1 million, did you say?
I am, yeah.
Okay, well, interesting. See how that pans out. As you said, despite volatility and valuations, mainstream financial firms, you've mentioned Larry Fink there, are moving ever closer, or ever deeper, I should say, into crypto and blockchain. I think you said earlier in our interview that you see the future of the financial kind of system all being kind of, on chain and being all digital. How long is that reality going to take to come about?
The define reality, right? I think the entire market being 100% fully digital, that is going to take years and years, right? When we're looking at financial markets, those are systems that have evolved over, a century and a half or, a couple of centuries. And now we're replacing it eventually with something built from scratch, which is something that makes it a lot more efficient and why it's a better alternative. But it takes a lot of time to replace all of that, especially when we're talking about, about finance, about money, about people's livelihood. You need to make that to do that in an environment that is safe, that is secured, that is control, right? The logic of move fast and break things that you see in pure software doesn't apply when we talk about finance. So it is going to take a lot of time. Now, what we're seeing is that shift, however, is not going to be 0 to 1 immediately, but that shift has started, and we are seeing it now. Stablecoin is a 300 billions market cap. Like it's not a detail anymore, and we're starting to see tokenized equities. We're starting to see some of the largest exchanges in the world, such as Nasdaq, talking about digital asset to make their settlement cycles better. We're looking at Swift launching their own blockchain. So it is going to it will be at least 10 years before we can say everything is digital. That's done. But I think that the process has started already, and the magnitude is going to be very significant in the next 2-3 years already.
You talked about the boom in stablecoins that we saw in 2025. Is there not a danger that regulators, perhaps less so in the United States, more so maybe in Europe, regulators and central banks, sometimes of course they are one and the same, may start to get cold feet and be their concerns about kind of losing currency sovereignty will grow?
Yeah, I think that there is definitely a concern, which is why the switch is not going to happen, overnight. Because, as I said, these are markets that are regulated, and rightly so, right? And when you talk about money, even more than just being regulated to protect users, we're talking about, as you say, national sovereignty and kind of in French we say pouvoir régalien. So I don't know, regal power. I don't know if that's a word in English, but it touches to the very essence of the state and political power. So clearly, it's something that is going to take time. Now, what is interesting is that the main worry for Europe was ahead with MiCA, right? And what we've seen over the last 12 months is that the US clearly have taken a quantum leap with the Genius Act around stablecoin, with now the Clarity Act moving forward to give clarity on market structure, like outside of just stablecoin when it comes to digital assets. And I think that now clearly Europe has a reaction to take, because already stablecoin, I'm talking about 300 billions, 99% of that is US dollars, right? So clearly it does become, I think, critical to Europe to have a clear positioning on it, and to also foster innovation on Euro stablecoin. So for me, the risk is more about being completely left behind on a market that is able to siphon a very large amount of capital and put them all in dollars, and that's what we've seen happening, so far, and make sure that we're not left behind. So I do hope that the reaction is going to come on the European side.
Right. And, even more than crypto, which of course we're very much focused on in this conversation, financial markets also very much excited by and focused on artificial intelligence and the kind of earth-shattering changes many believe it will have on our lives, but also on some of the dangers that it might pose. Paint me a picture of how you see artificial intelligence, AI, changing the financial industry, and perhaps some of the ways that it won't.
Sure. So, I mean, there is and interestingly, those two topics are linked, right? Because, I mean, I'll get to that probably later, but a big use of stablecoin and digital money is the ability to make automated payment in any size at the same cost. And when you think about agents, artificial intelligence agents taking control over your financing transactions, the ability to move money as efficiently as you would information, those two I think are very linked. So I definitely believe that AI is going to have a very big impact on markets, right? Because at the end of the day, markets are information. Everything that touches financial market is information and it's data, and all of that, of course, can potentially be impacted by AI, both in terms of financial decision that you want to make, types of planning that how you want to plan and manage your finance, but then also eventually taking decisions, taking actions on your behalf. Because once money and value is digital, it is moving on the same rail, so to speak, than just data, and so therefore can be sent left and right and completely automated, which is of course part of the appeal, is that you can automate many things and make it with a more complete information than you currently have, but also part of the risk, hence the need for regulation, for controls, because you don't want to have people signing up to scammy AI agents and see them take full control of their savings and being ruined. So of course you need to have control. So I guess like many new technologies, there's a massive opportunity that I think can benefit most users, but at the same time a risk that of course needs to be understood and needs to be properly controlled and regulated.
Yeah, maybe it's not Terminators we have to worry about, but AI agents kind of draining our bank accounts instead. But look, another area we might not have predicted would have gained so much attention in 2025 is prediction markets. If I'm right in thinking Keyrock does research in this area, I don't know if you're actually kind of involved in terms of trades and contracts and the like, but how much of a boom are we seeing here?
So we published a very big report yesterday, actually, with June on prediction markets. I think it's a very, very interesting sector, because what you see in finance, like many financial markets are actually used as a proxy for information, right? And so you can take, if you take VIX, right, on the VIX market on volatility, or you take the oil market as a proxy of potential tension in the Middle East or whatever. You have many markets that are a proxy for something else, right? And you can use financial market to hedge yourself, to manage your risk, versus certain information that may come out in the market. Now, if you look at prediction markets, it's actually much more direct, because you're creating a market around the information itself, right? So all of a sudden, it's no longer like, are we going to see some unrest in the Middle East that could eventually impact, oil supply, which would have an impact on oil price going up? No, it's the other way around. You're actually taking a position on the event itself. So you have a way that is much more direct to express opinions and to manage your risk. And so that's the impact when you look at it in the context of financial markets. If you look at it more broadly in the concept of forecast and using really kind of collective intelligence to make forecasts and make predictions, you have something that has proven to be extremely efficient. And that's, of course, they came into the spotlight, during the elections, for example, where many of those markets were much more precise and much more right than many polls. So I think you have a very, very powerful tool to harness collective intelligence around these markets. So I definitely expect them to keep growing in the future.
There's been a lot of controversy, of course, because it's one thing to, bet on a war in the Middle East, for example, because that might directly impact your business. It's another to buy and sell maybe contracts for the result of a sports event and claim that it's not sports betting. So I'm just wondering if you have a perspective on this, if whether, kind of contracts related to sports results are, that's blatantly sports betting and shouldn't be a part of it, or if that's no more gambling than buying Nvidia futures. What's your take?
So I think, to be very honest, like I'm not an expert in the gambling market. I'm not a lawyer into what defines gambling in the different states in the US. So like how do you define gambling versus speculation versus hedging? Those are very fine line, and it's not something that I would have a very educated opinion on. So I don't know.
Well, we'll talk about something that you presumably have more of a view on, which is, fintechs, startups, growing much more so in continental Europe than we've seen in previous years. There used to be a complaint that, continental Europe wasn't, such a great incubator for fintechs and startups. That's obviously changed in recent years, now notably in France and Germany. Belgium, a post-Brexit boost perhaps notwithstanding, doesn't always necessarily get talked about in the same conversation as, say, Paris or Berlin or Amsterdam. How would you depict the kind of fintech ecosystem in Brussels compared with others?
I mean, I think there's a couple of things that are very interesting there, and a couple of reasons why it might not be talked. I mean, it doesn't have the same visibility internationally. I think that, first of all, it's a very B2B market, Belgium. I think that part of that is because it's a small retail market, like the national market is small, and to be fair, it's also split in three in terms of languages and so on. So it makes it a very hard market to build something B2C or in and to start from. So you have the market characteristics which by default make it a much more, I guess, interesting space for B2B companies and startups, which we see some of. Now, what I think in terms of the scale at which these companies get, I mean, there are some great examples of amazing software companies like Odoo, like Colibra. They're amazing companies that have been growing tremendously and that multi-unicorns. But I do think that there's a very conservative mindset in Belgium in general, which means that there's a tendency to be less risk-taking. I think the amount that is in Belgium stuck on savings account versus being invested is, a very clear testimony of that. So there is somewhat of a certain conservatism and lack of risk-taking in the country. And I think that also what we see in startups, and it is something that in my mind is decreasing, which is great, there's also more limited ambition usually. I think that, if you want to get to, if you want to build a company of 500 people, you need to aim for a company of 5,000, and that eventually you get to something big. The point is that this willingness to dream very big, even when you have absolutely nothing, is something that in my mind is a lot more common in other countries than what you would have in Belgium. And that has somewhat stifled growth in the past. But again, it is something that is dramatically changing and potentially part of the reason why we see more success in Belgium, but also in Europe at large. So it is a mindset shift that I can only but encourage. Okay. When we started, 7 years ago, and we were saying Keyrock is going to be one of the biggest in the world, believe me, that was not taken very seriously. But I think you need to dream big to build it.
All right, Kevin. So look, it's time now for our round of rapid fire questions. Are you ready?
Sure, go ahead.
Okay, great. So I'll put 90 seconds on the clock. When we'll get through as many as we can. One-word answers is what I'm looking for. When the alarm goes off, we will let you answer that particular question and then finish. So I'm starting the clock and away we go. What fintech segment, in your point of view, in your mind, has the biggest potential over the next 5 years?
Digital finance.
What is the biggest pain point in your everyday financial life you'd like to see resolved?
The slowness of regulators.
Are bank bosses ready for the AI revolution?
Ready, not.
Are customers ready?
No.
Have regulators in the US and EU kept pace with all the new behaviors and possibilities in the financial industry that we're seeing?
No.
Have you personally ever invested in crypto? I think we can take that as a yes.
Yes.
Are physical points of sales part of the future of finance?
Yes.
Are bank branches part of the future of finance?
Yes.
On a scale of 1 to 10, 10 the most likely, 1 the least likely, how likely is it that one of the neobanks in the next 10 years will be as profitable as a top-tier legacy bank?
10.
That central bank digital currencies, again, in the next 10 years will become a mainstream reality in the US and EU?
So,
just a number,
very unlikely because you're just taking US and Europe together. So 1.
That you'll be able to open a crypto account at a top-tier bank.
That's 10.
That SWIFT will still be the main tool for transferring money around the world.
The blockchain might be.
Okay, that a new rival will emerge to challenge Visa, MasterCard and the like.
10.
And that we'll see a top-tier bank or insurer bought by a fintech, again, in the next 10 years.
10.
Wonderful. I'm so happy when we get through all of these questions, but that is, I'm afraid, all we've got time for our round of rapid fire questions and for our conversation. So I really just want to thank you, the co-founder and CEO of Keyrock, Kevin de Patoul, for joining me today and for this really interesting conversation. Thank you.
Thank you very much, Elliott.
And for everyone watching, we will be back again next time with another big name from the world of finance and technology. We do hope you'll be able to join us again then. In the meantime, don't forget to subscribe to the Paris Fintech Forum YouTube channel and to follow us on X at Paris Fin Forum. That's all for now. See you next time. Bye-bye.